This video is a continuation of our mini-series on the accrual basis of accounting, where we put a highlight on how we account for accrued expenses. If you missed our previous videos on the accrual basis of accounting, you can check it in the description below. We will talk about how we account for accrued expenses, the role of estimates in practice, and explore ways on how to understand them properly by discussing the journal entries for each stage in the life of an accrual. Welcome to Accounting Zero to Hero. We are here to help you understand the fundamental accounting concepts through simplified technical discussions and practical applications of the accounting standards. All of this to help you go from zero to hero. Now let's go back to the video. Accrued expenses belong to the four types of adjusting entries under the accrual basis as previously discussed. They result from transactions wherein the company has used up a service or benefited from something, but the company has not yet made any actions to compensate or pay the service provider or the supplier. So because these are unpaid items, you will be faced with some cleverly worded transactions in your accounting problems. If you're a student doing basic accounting, like the company received the electricity bill for the month amounting to 10,000, or the company hired an employee with a monthly salary of 5,000 payable in the first day of the following month. These are all examples of expenses that may be construed as not relevant since the company did not do anything to pay them yet. However, by virtue of the accrual basis of accounting, they should warrant an adjusting entry just because the company already benefited from the utilities and from the services of the employee during the month, whether or not they have been paid. My suggestion is that you mark these transactions as a potential accrual so that you don't forget to adjust them when preparing your 10-column worksheet. Now let's take a look at the timeline of the life of an accrued expense. Let's assume that this fictional company has a regular financial year end of December 31. Towards the end of the year, let's say on December 29, the last day of operations, the company received the electricity bill for the month of November and December amounting to 5,000. The company was not able to process the bill for payment, and in the end, it was paid on January 10 of the following year. There are two significant dates in this transaction that you need to watch out for. Number one is the year end. This is when you need to do the adjusting entries because you need to prepare the financial statements. The second one is the payment date. This is the date when you actually paid for the bill. Let's now discuss the journal entries. In order to adjust for accrued expenses during the year end date, you need to determine how much of the bill was actually incurred during the year. In this case, since we can see that the utilities bill is for the month of November and December, 100% of the amount pertains to the current year and should be accrued. The pro forma adjustment for an accrual is a debit to an expense account and a credit to a liability account to recognize that we have a current obligation to pay for the bill in the future. We recommend you to use separate liability accounts for each accrued expense transaction to be able to separate those accruals from each other. With this journal entry, we can post it to the T accounts. In this example, you need to notice two things. Number one, that the utilities payable account has a net balance of 5,000, which implies that the company has paid all their utilities except for this particular bill for November and December. And the utilities expense account already has a cumulative balance of 22,000, which represents the total utilities that the company has incurred from January to December of the current year. This is the beauty of the accrual basis of accounting because through this basis, we are able to measure the true performance of the company based on what should be recognized in the profit or loss regardless of what portions of these expenses have been paid or not. With this example, I would like to open up another scenario that we encounter normally in practice. What if the bill that the company received is just utilities bill for November? Obviously, you need to record an accrual for November utilities as follows: a debit to utilities expense and a credit to utilities payable for 5,000. Posting it to the T accounts, you will see that the utilities expense has a running balance from January to November only. Now, because we are using an accrual basis of accounting, in this situation, even not receiving a bill doesn't matter for the company because in order to reflect the true performance of the company, they need to accrue for the missing December bill too. This is because whether the company has been billed or not, it is a given fact that the company used electricity or utilities during December, and those usage should be reflected in the accounting records. What we do in practice is very varied depending on company policy, but in general, we should take the best estimate of the December usage and accrue it as if we have received the bill like what we did in the November entry. In this case, we are just assuming that the best estimate based on the bills in December of the previous year is 4,500. Hence, we accrue the December estimate to complete the utilities expense for the current year. That would be a debit to utilities expense for 4,500 and a credit to utilities payable for the same amount. In that way, our utilities expense account, if you see the T account, it would have the complete utilities expense from January to December of the current year, which only amounts up to November have been billed, and then we estimated the December amount. During the payment date and January 10 of the subsequent year, we just need to record the cash payment and cancel out the utilities payable. The payment date journal entry can actually be as simple as that. In the next video about this, we will explore accruals further by taking a look at reversing entries and why they are helpful in accounting for the more complicated types of accruals. And this is it for the video. I hope that by now, you can put all of these knowledge to good use. And if you want to see more accounting content, don't forget to subscribe and click the notification bell. See you!